Welcome everyone to Vested Interest. This is Shane back for another Stock Pick of the Day video. It will be the last one of the week. It is Thursday, October 3rd. I only do these Monday through Thursday. We're going to take a look at one out of the industrial sector, Union Pacific. It is also one in my portfolio. I don't look at a lot of them in my portfolio on a regular basis, but this is one that is in there, so I want you to know I am long Union Pacific. Now, before we get too far into the video, if you could do me a huge favor, hit that thumbs up button down below if you find any value in the content. If you are a dividend growth investor, make sure you hit that subscribe button. Join us on this journey to financial freedom. Join the Vested Interest community. Click that notification bell so you're notified whenever we put out any new content. Again, I do these Stock Pick of the Day videos Monday through Thursday whenever the market's open. I also do a portfolio update every Sunday, so come back and join us for that video as well. I'll put that out Sunday morning at 7:30. I do a couple other videos monthly. One where I look at companies that I'm looking at to buy for the future month. So I've already done my 3 stocks I'm looking to buy in October, as well as a review of the dividends and options from the previous month. So this week, probably either Friday or Saturday, I'll put that video out as well. So there'll be a couple other videos coming out later this week. But this will be the last Stock Pick of the Day video. If you could watch the videos a little longer than you normally do, or watch them to the end, that would be ideal. Watch time is another one of the metrics that YouTube looks at to help spread the video. So the more that I get thumbs up, the more subscribers, the more clicks on the notification bell, the more comments dropped below in the comment section, as well as watch time are all the metrics that YouTube decides or uses to decide how far and how much they spread the video. So help me out and do all that. Really appreciate everyone who has done that, and a special thank you to all the subscribers out there. You guys are awesome. The channel continues to grow because of people like you. Now this is the Vested Interest Stock Screener. This is how we will be going through the video. So we'll look at these metrics here, and we will tally them up at the end, see if it meets 5 of 8 since it's an industrial company. If this happened to be a bank or a financial company like an insurance company, we would add in price to book. You can use price to book for any company, but outside of banks, one being fair value for banks, or like I said, insurance companies typically use price to book, compare it to other companies in the same sector. For Union Pacific, for example, if you wanted to use this one here, you would want to look at, if you wanted to use price to book here, you would look at other railroads and compare them and see how they stack up. And I would look at 2, 3, 4 companies, and then you'll get a range somewhere. You can also use price to book by comparing the current price to book of the company you're looking at to its historical average. It'll tell you if it's more expensive or less expensive than it has been historically. So we'll run through this screener here, and you go ahead and tweak this to your liking. We're all in different places in our investing journey. Some of you may be older. I'm in my mid-40s. Some of you may be younger in your 20s or 30s, so you might be looking for more growth. You go ahead and use your own criteria. Don't just blindly copy mine or anyone else's. You can use this as a starter, but tweak it to your liking. And this is just a screener. Just because it meets 5 of 8 or 6 of 9 if it was a financial company, it does not mean I'm investing. It just means it goes onto my watch list. Then I do more of a deep dive into the financials, look at the balance sheet, the income statement. I'm looking at stuff like margins. Are they growing? Is their revenue growing over time? Do they have more assets over liabilities? Are they paying down debt? What is their price to book? What is their PEG ratios? I also do a discounted cash flow analysis to see kind of a range of what I'm wanting to pay for the company. And then I wait for the company to fall into that range I'm willing to pay and add it there. Now back to the Union Pacific here. Check them out at www.up.com. That's www.up.com. That is their homepage where I pull this information from. So an easy one here. At Union Pacific Railroad, we're prepared to ship just about anything: food, forest products, automobiles, agricultural products, coal and chemicals safely and on time. No rail, no problem. Our shipping capabilities are not limited to our extensive system map. We will coordinate your shipment through our network, through other railroads, and over the road, providing complete door-to-door service. We offer our customers the most efficient, environmentally friendly transportation solution available today. And that's what they do. They're transporting goods and goods to you, right, over the rail, or as I said, over the road here. Now, the reason we are taking a look at them, down 1.12% on the day. We are talking about Union Pacific Corporation, ticker UMP. Again, this is a railroad out of the industrial sector. Closed out the day at $240.62. 52-week range as low as $199.33, as high as $258.66. Market cap of $146.585 billion, a beta of 1.05. So they are just slightly more volatile than the overall market, one being the volatility of the market. PE ratio 22.64. So a little elevated, not dramatically so, but a little elevated for this type of company, in my opinion. I'd like them to pull back a little bit closer to this 199.33. This is one I'd like to add to. And my cost basis is down here closer to this 199.33. So I would like it to drop back down. But it's one, if I wanted to nibble a little bit, I probably could. And it would still keep my cost basis relatively low, maybe bring it into the low 200s. But it'd be nice if this one dropped down into, 210. Back to 200 would be ideal, but I don't know if it's going to get there. We'll see. Now, PE ratio 22.64, we mentioned that. EPS is $10.63 per share. Earnings date October 24th, so that one is coming up at the end of this month. Forward dividend $5.36 with a starting dividend yield of 2.2%. Again, on my dividend yield, I think is a little bit higher than this, right around 2.6 or 2.7, I believe. So obviously, if you were to get them cheaper, you could get a higher starting dividend yield. But right now, 2.2 is not bad. I will say this one did pause their dividend recently. They did just start increasing it over time here, but it was a small increase, the last one, and that was after a couple year pause. So they are growing the dividend again, but we'll see if they continue to do that and how fast they are going to do that. We'll see that here in a little bit anyway. Ex-dividend date, August 30th. They did pay out, or will pay out, September 30th. So they are going to pay out, or they did pay out here at the end of last month. So kudos to all of you out there who got your dividend last month. And a one-year target estimate, at least according to Yahoo Finance, $263.71 per share. So they do see some upside as far as price appreciation on this one. Jumping over to the right here, we're going to look at dividend yield theory. To do that, we look at their 5-year dividend yield average, 2.15%. Compare it to their current forward annual dividend yield, 2.2. Over here for it says forward, 2.2, same number. Since it is higher than their 5-year average, not by much, I'll say, but still a little bit higher, just ever so slightly, this one would be slightly undervalued right now, at least according to dividend yield theory. Again, I'd like this to pull back personally, but dividend yield theory does say it's potentially undervalued. Payout ratio is low. I like 75% or less. They're sitting at 48.87%, so the dividend does appear to be safe. Dropping down to free cash flow, you can see here going back to 2021, $6 billion in free cash flow. 2022, 5.7, a little bit of a drop there. 2023 further dropped down to 4.7, trailing 12 months at 4.8 billion. So they do have decreasing free cash flow the last few years, though it looks like they may be back on track here because most of this trailing 12 months will be 2024 numbers now. Obviously, we have a few months left, but it looks like they may be beating their 2023 numbers, so back to growth, even though it's not a lot. It does look like they're maybe growing again. Now, obviously, we want to see another 2 or 3 years of continued growth before it's a trend, but that's good to see a turnaround, potential turnaround, I'll say. They are repurchasing shares as well, 7.2 billion here. 2022 down to 6.2, dropped it way down in 2023. So the decrease in free cash flow as well as the decrease in repurchase of shares tells me they're going in the wrong direction. And again, they continued that trend, lower repurchase of capital shares. And if they're trying to get their finances in order, that's what they should be doing. They shouldn't be buying back shares. They should be paying down debt. So it is nice to see that they are still repurchasing shares, but they have dropped it way back. So hopefully they're using that free cash flow that they were using to repurchase shares before to pay down debt. Now, jumping over to stockanalysis.com, this is just another source that I go to. I always recommend more than one source so you can make sure the information you are getting is accurate and up to date, right? Sometimes they're behind the times in changing that information or updating that information. Sometimes they're just wrong, right? These sites they're run by humans, and sometimes we make mistakes as human beings. It's human nature. They do have 19 analysts that have taken a look at this. They call it a consensus buy. Low estimate of $210. Love it if it dropped back to $210, which would be a 12.73% decrease from where it currently sits. Average estimate of $259.32. That's pretty close to what we saw with Yahoo Finance on the previous page, and it would represent a 7.77% increase. 288 high estimate would represent a 19.69% increase in the stock price. All the while, you could collect that 2.2% dividend yield if you were to buy them now. Now, jumping into statistics here, I like to look at return on equity and return on invested capital. I like 10% or better for these metrics. Return on equity, 43.76, very nice. I like that's 4 times higher than what I'm looking for. Return on invested capital, not quite as nice, but still over the 10% I'm looking for at 12.03. EPS growth, I like 5% or better forecasted over the next 5 years. They're sitting at 10.56%, so it meets the metric there with a revenue forecasted growth of 4.93. I want to see positive revenue growth. It's not one of the metrics I look for. It is one of the metrics that I look for whenever I do more of a deep dive into the financials. That's part of the reason why I include it here. Now, I did say I am long Union Pacific, so I wanted you to show my position. I have 42.5634 shares. I am up 20.11%. Again, I bought this a while ago. My cost basis is way down here, 199.83, right at its 15-week low or 52-week low. So again, I could nibble on this one a little bit, even at 240, and bring this one up into the low 200s and still be within 15% of a 52-week low here. But I would like them to pull back a little bit more. But it is on my list. If they do continue to pull back, if they got below 230, I might nibble a little bit. Heck, I might even add 1 or 2 shares here if they just pull back into the 230s, 238, 239. But we'll see where they go. I would like them to pull back significantly, and then I would add, try to run this to 100 shares. But again, I don't know if they're going to get back down to the 199.83 cost basis I have. Now, quarterly payout ratio, they're saying 50.38%. Again, why I like more than one source, right? They don't quite agree. They're pretty close. I think Yahoo Finance had it in 48. They've got them at 50.3, so split the difference. You're right around 49, 50% payout ratio, still under the 75% I'm looking for. Again, dividend growth slow. They just started regrowing their dividend again, and it was not much of a raise, 0.77%. I want to see more of a raise there. That's not even going to keep up with inflation. Dividend growth 17 years, I disagree with that. Like I said, they did pause it. We'll see that here in a minute. Now, the buyback yield is positive at 0.66%. Shareholder yield positive at 2.89%. You want to see positive buyback yield and positive shareholder yield. The better, the more, the better. The higher, the better. Now, going back in time, they were paying $1.18 in February 2022. They raised it up in May 2022 to $1.30, and then they kept it at $1.30 from 2022 all the way here till the most recent raise in August 30th, 2024, up to $1.34. So that's why I say they definitely paused the dividend for 2 years here, if not a little bit more than 2 years. Payout is on the March, June, September, December timeframe, like most companies. Now let's jump in and see how this one shakes out overall. So understand the business. That's where we started. Check there. It's a railroad. They ship products. That's what they do. Free cash flow. It was decreasing at least through 2023. It looks like 2024 might be the turnaround year. I'd want to see more. I want to see 2025 start to grow a little bit more. 2026 even more. Growing dividend, yes, though that's recent growth, right? So very low growth. Dividend payout ratio is under 75%, right around 50%. So check there. Check valuation based on dividend yield theory. Said it was potentially undervalued, slightly undervalued. Check there. It is not within 15% of a 52-week low, so no check there. Return on invested capital, return on equity, both over 10%, so check there. And earnings per share growth over 10%, so check there. So that's 1, 2, 3, 4, 5, 6. I am not worried about this company right now. It does meet the metrics to make it onto my watch list. Obviously, it's already in my portfolio. I also use this screener as a quick back check, right? If this was only to get 3 checks or 2 or 4, under the 5 anyway, then it might be worth doing a deeper dive into the company. And you should be looking at companies in your portfolio from time to time just to make sure they still meet the metrics and are still good companies that you bought them as you bought them in the original. Well, that is really it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Drop a comment down below. Let me know what you think of the video. Let me know what you think of Union Pacific. I do personally read and respond to the comments. I am always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Union Pacific you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it down below as well. And this is Shane signing off. Wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great weekend, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing in your educational and entertainment purposes. Investing involves risk. You can lose money. So never invest any amount you're not comfortable with. Always do your own research. Invest based on your situation, circumstances, and select criteria, or see the advice and counsel certified financial advisors.